Hey traders from around the world, this is Robert Thompson, also known as RT3 with RLT, coming at you with a quick video about optimizing your option sales. All right, 3 quick tips on selling options. Now, if you're looking for option sales tips, chances are you're probably already experimenting with that a little bit. So I'm going to skip basic things like sell puts on down days. Do it with good companies. Make sure you're okay owning the shares, things like that, all right? We have a lot of content on basic option stuff. You can find it on our YouTube channel and our website, okay? So what I'm going to focus on is 3 things that even veteran option traders might not be doing that could really optimize your results and improve your option selling performance. All right, let's dive in. All right, so here we are. We're inside the broker. We're going to talk about 3 quick tips for option sales, and I'm just going to give you the punchline right up front so you can remember that much at least. All right, give yourself more time, 1.5 to 2 months. Take your profits early and properly interpret volatility. All right, this is what we're dealing with here when we talk about optimizing option sales in new and exciting ways. So let's break these down and get into it. All right, so most broker option chains kind of look like this or something like this, whether you're using Thinkorswim or, I don't know, Interactive Brokers, whatever that might be, you're probably familiar with an option chain. All right, if you're looking for option sales tips, you got your strikes, your expiration dates here, you got the specific dates, okay, and then over here is the implied volatility percentages. So we're going to go through the tips that I have for you guys, and then yeah, hopefully that just turns you into profitable option sellers, right? So the first one I have, obviously, give yourself more time, okay? 1.5 to 2 months is what is recommended by a lot of the leading option sales experts in today's market. So I talk to a lot of people who will sell options 1 or 2 weeks out. All right, so I have Tesla on the screen here as an example. If I go to the weekly options expiring, let's say next week, I'm not quite going to do today, but let's say next week, all right, I want to sell a put on Tesla because today is a down day. Well, I throw that in there, and I'm getting some nice premium for that, okay? Problem is, a lot can happen in a week, okay? So I do whole courses on this. But generally speaking, the game of option sales is a statistical style of trading, all right? It's based on probabilities and statistics. And usually those probabilities and statistics tend to play out better over longer periods of time. All right, the more you trade and the longer you trade, the more likely that your trades are going to reflect the probabilities and the statistics upon which they are based. If you sell weekly options, inevitably you will face a situation where something unexpected happens and you will not be able to adjust quickly enough and you will not have enough time to make any changes. Okay, so that can be very dangerous. That has to do with the Greeks. That has to do with just a lot of different factors, but make sure that you give yourself more time. The common misconception is that by selling shorter expirations, you can make more money. And the math doesn't actually support that, all right? So that's just the basics of it. Just give yourself 1.5 to 2 months, all right? So for example, right now is Friday, August the 5th, and we are going to probably, if I were opening new option positions right now, I would be doing it in September, all right, because that's 42 days away. All right, so that's 1.5, 2 months out. You're generally looking like for 45 to 60 days. All right, that would be ideal. All right, the next thing that you want to do, based on our list here, is you want to take profits early. Now, this ties into what we were just talking about. All of the bad things that can happen when selling options get exponentially worse in the last week or two of the option sales. I understand it's tempting to think that that's when the most profit occurs, but again, the math doesn't really support that in most situations, statistically speaking, okay? So have targets and use GTC orders. Take your profits early. I recommend 50%. of your premium. So if you sell a put for $1, okay, you're going to set a target to buy that back at 50 cents. That is your GTC order. Good till cancel. You'd be surprised how often GTC orders just, fill in the morning, and then you wouldn't be able to get that price again if you tried. So use GTC orders, use a 50% target. Your win rate will go up substantially, and your big drawdowns will be reduced. I don't know how many of you guys have had the experience. I definitely did when I got into this game to start, where you're holding an option, and you're just going to hold to expiration because you want all the money. You want all of it, 100%. And then something disastrous happens, there's news, or there's a big sell-off or something. There's a big flip in the last week, and all of a sudden you have either given back a substantial amount of your profit, or worse yet, you've gone green to red and are potentially now sitting on a losing position. What was an out-of-the-money option may now be an in-the-money option. All right, all of those are bad things, and you can avoid that by just being aggressive about your targets. When you're playing the options game, being aggressive with targets is usually the better way to go. Okay, so that's the tip number 2. Last but not least, we're going to properly interpret volatility. Now, I could do an entire video on that topic alone. I could do a masterclass on properly interpreting volatility. We don't have time for that today, all right? I just want you to kind of get an idea here, and then you can do some more research either on our YouTube channel, take a course with me, you can go to the website, whatever. All right, so most people, when they're selling options, they're strictly looking at the implied volatility numbers here, and they're trying to decide, are those good or bad? That can work, but it's not what is most optimal. And the reason is all of these implied volatility numbers are benchmarked to the broader markets, okay? Namely, mostly SPY. Okay, broader markets. That's what tends to determine what these numbers are. And the problem with that is what is volatile for SPY is not necessarily volatile for the stock that you are trading. And I'll give you one of my favorite examples, okay? This is GameStop, all right? Ticker symbol GME. Most people would consider this a extremely volatile stock, rife with option selling opportunity. And sometimes that's true. However, if you're strictly going by these numbers, the opportunity is insane. You got 300% this week, you got 100% throughout this month, right? Like there's a lot of volatility opportunity there. But that's not really the proper way to think about volatility. We want to think about volatility in terms of GameStop. Is GameStop's volatility really, really high? And the question is 200% high? Well, it's higher than 100%. And it's lower than 300%. Okay, we already know that. That seems basic. And we think about this in terms of price sometimes too. All right, what is high volatility for one stock is not necessarily high volatility for another stock. If I told you there was 100% volatility on SPY, you'd think the world was ending. That's insane. I got to go sell some options on SPY right now. And you'd probably be correct. Unfortunately, the reality is 100% volatility on GameStop, that like we have right here, not actually that great. What you really want is more like 200 or 300%. But you'd only know that if you traded GameStop a lot, or if you use a different metric. And that's what I'm going to tell you about, all right? I like to use IV rank to measure my volatility. All right, Tastyworks puts it right there on the page for you. If you want a free resource, go to barchart.com. That's what I use. Okay, so let me just throw that on the screen here. Barchart.com. That's what I recommend to my students if you don't have Tastyworks. The reason that one's good is it will give you IV rank in the options overview. So you go there, type in a ticker, scroll down the page, and look for the options overview. And what you're looking for is IV rank. This will compare a stock's volatility to itself. And we do this all the time with price, team, don't we? If I wanted to sell Tesla at 1,000, I think most people would be okay with that. But if I wanted to sell SPY at 1,000, well, I'm going to be waiting a very long time. I probably wouldn't get an opportunity. All right, what if I wanted to buy the dip? All right, well, I want to buy Tesla when it's at 600. That would be a big dip for Tesla. Well, if I buy SPY at 600, I'm probably buying an all-time high breakout. That doesn't make any sense, all right? So we have to compare stock prices to themselves within the context of each individual stock. Volatility is exactly the same. When we are selling options, we want to sell high so we can buy low, right? That's what we're doing with volatility. So use IV rank, and the metric that I rely on is typically over 50. All right, if IV rank is greater than 50, you've got yourself a really good opportunity. As you can see, GameStop's at 22.3 right now, which is kind of tame. So GameStop's a bit of a snooze right now. I probably wouldn't be interested in selling options in here because volatility tends to revert to the mean. So that means volatility in GameStop's more likely to go up from here than down, and that is not good if I'm selling options. But if we look at Tesla, oh, that's the same, 29.1. Let's find something more interesting. How about Net? I saw them on having some crazy earnings numbers today. All right, so Net's got an IV rank of 45. That's pretty close. You could dig into the option chain and see if you could find something there. There's lots of ways to search for this kind of stuff. Sometimes what I like to do is I'll go in here to a Tastyworks watch list and I'll just sort it by volatility. All right, so you got Bed Bath & Beyond, you got Target, you've got Peloton. Is Peloton still a company? I digress. You've got Carvana, you've got, lots of different options in here. All right, so those are the tips that I have for you guys today. Remember, give yourself more time, couple of months for the probabilities and the statistics to play out, okay? Make sure that you are also taking your profits early. That's very important. That will improve your win rate and reduce your big catastrophic losses. And then also make sure that you are properly interpreting volatility. All right, quick little run through the basics there. Hope that helps. Hope you guys have lots of success going from here. Check us out at reallifetrading.com. Check out our YouTube channel on YouTube, Real Life Trading. And I will see you in the next video. Love life, live life, and trade it.